So here we're looking at inventory. Remember, inventory is an item that you have companies keeping just for the purpose of reselling and making profit. So like I said, this is just a part looking at the storage of that inventory. How you purchase inventory, we have already looked at purchases to pay cycle, which is the process by which you buy your inventory. It's the same process. However, this part is not looking at the purchases because we've looked at the controls, risk, and everything related to purchases, whether it's inventory, whatever you are buying. It's the same process, the same controls, the same risk. However, this part is looking at the storage of inventory in terms of risk. What could go wrong? Yeah, and how do we prevent what could go wrong while we're trying to store the inventory? Right. So that is the focus of this part. I don't want to get confused. Yeah. So please take notes as we progress. But as far as A is concerned, we'll still use the same approach, which is talking about the process. This time around, the process is just inventory, so I won't put any process in place again. I'll just talk about the risk, which is what could go wrong, which is the same we would normally look at it. Then if we know what could go wrong, we need to be able to identify what will be our control objective. Then when we know what we want to achieve, then we can design the control activity that will achieve those objectives. And that way you can be tested is for you to design what will be the auditor's procedure to test those controls. And so I'm going to give you procedures. So this is our standard approach, and we'll still continue to use it because, like I always say, your questions can never come outside of this. Yeah. So deficiency means these controls are not present, right? That is deficiency. If they ask for deficiency, it's about this control not present. If they ask for what could go wrong or the risk, then it's in this column. Yeah, they can also ask for control objective, or they ask how should auditors test those controls. So this is about the auditors. Right. So remember, it's still inventory that we are looking at, and what could go wrong? That is the first question. The first thing that could go wrong with inventory is that it can be stolen. Because inventory is a valuable item, it's an asset. If you steal it, you can sell it and make money. So there is so much motivation to steal inventory, so it can be stolen. And what would be our objective? Our objective is to ensure that inventory is not stolen. So remember, we always start with to ensure that inventory is not stolen. And how do you prevent inventory from not being stolen? That will be our control activity. So which means we need to keep inventory in a secure warehouse. Warehouse is the place where you keep your inventory. So if you are going to put it there, you need to lock it up with the proper security code or padlocks or something strong door. And in addition, you need to have a monitoring system with CCTV, because if somebody sees the CCTV, is already a deterrent for them to want to run away, because they know that even if they succeed stealing, they can be caught from the recording of the CCTV. Yeah, so that is the control. And for testing, auditors should just visit. So auditor should visit warehouse and check that it is secured with even CCTV to monitor. So that's for the first risk, what could go wrong. Still on what could go wrong, it can also be damaged. Can be damaged. If you don't handle your inventory properly, if you just throw it on the shelves as you like, you don't put it where it should be, you allow it to just pile on each other, you don't arrange it properly, it can be damaged. And once it's damaged, you've lost value for it as a company. And what does it mean? You can't be profitable and you're losing value, and You don't want that to happen. So what will be our control objective is to ensure that inventory is not damaged. Inventory is not damaged. That is the objective of the control. So what control do we need to design to achieve this objective? We need to ensure that staff are trained on how to handle inventory, and likewise, they must be kept at the correct temperature, because some inventory get damaged if the temperature is too high. So we'll keep inventory at appropriate temperature. And train staff on how to handle inventory. Very important. An auditor should observe the inventory handling process and a visit to warehouse to inspect the inventory and storage temperature. Very important. So you see that about inventory is mostly about physical audit process. Auditor is going there to check it. Auditor is going there to observe. Auditor is going there to inspect. And that is mostly about inventory. It's always like that. What else could go wrong? In as much as we said it can be stolen, or maybe it can be damaged. Also, it can be wrongly recorded. We have 25 inventory, but our financial statement is showing 56. That is a problem. You don't want that to happen. So the same way we say it can be damaged, it can also be erroneously recorded. It can be recorded at a wrong amount. That could go wrong. That's what could go wrong. So our objective, which is a control objective, is to ensure that inventory are accurately recorded, to ensure that inventory are accurately recorded. So if we say in financial statement we have 25 inventory, if we check the warehouse, we should have 25. And what is our control? The control is very simple and most popular. It's about regular inventory counts. It can be continuous or it can be full count at the year end. Continuous is when you do it maybe quarterly or monthly, every time you are checking your accounting, which is the best, though more tedious. And the full year count is when you just do it once towards the year end, which can be very, very stressful and maybe even less accurate compared to when you have been monitoring it periodically in the year. But whichever way depends on the business, but either way is fine. Just make sure you do the count and you are as accurate as much as possible. So regular inventory count is the solution to this one, and auditors can test this one either by inspecting the report or they even join one of the counts. Inspect inventory count with client or review inventory count reports. For earlier periods But remember, the last one for the year auditors must be part of it. So I will say inspect inventory, year-end inventory count. Yeah. So this one with the client, that is the year-end. That one, auditors must be there. Spend inventory count with the client. This is for the year-end. But in addition, if the client have done some, you can also review the inventory count reports of the ones they've done before. And that is the process. Remember, like I said, it is very easy for inventory. It's just about ensuring that inventory is safe, is not damaged, and is accurately recorded. Those are the three things that could go wrong. And in terms of the control objectives, these are the control objectives, these are the control activities and procedures. Very quick and sharp. But just to quickly touch on stock count, because it is very important, extremely important in audit. Please remember, auditors are expected to be present during the stock count. And in fact, I always like to break it down into before, during, and after. What should auditors do before? During the count, which is when the count is going on, and after the count. You should be able to summarize stock count exercise like that. So before is about planning. And this means you need to get your staff. Yeah. So prepare audit staff. How many people do you need? Where would they be going to? Prepare audit staff. Auditors need to plan logistics. Where are they going? How will they go there? Yeah. You need to also read count procedure ahead of the exercise. Very important. So all of these things, you need to do it before you go for the count. And when you go to the count, you need to observe as auditors. Remember, I'm looking at auditor's role in stock count. Yeah. So you need to observe the counts. You need to perform test counts. So if client is definitely going to count every single item, you are watching them count every single item, but you can just select some shelves to say shelf 2, shelf 3, I want to count by myself, and I will check what you have in your sheet to be sure that you are accurate. So you should perform sample counts to confirm client record. Yeah. And as the count is going on, remember the clients are counting 2, 3, 4, 5. They are counting, but you as an auditor that you are observing, you must ensure that they are not moving inventories at all. No movement of inventory, because if not, it's possible that they are counting something twice, or they are counting something, they remove it, they put it in another place again to recount. There will be error. So you need to ensure no inventory movement during the count. You need to be sure that does not happen. And after the count, you need to prepare a count report. And you need to also sign it to show that you were there and you are happy with the numbers that you've seen. Yeah, so please, you need to know in the summary what auditors usually do before the stock count, during the stock count, and after the stock count. Very important, and that's where we'll end it for inventory. The next video, we'll look at PPE.